Hello, friends, and welcome to this live feed from me, Simply Stocks. And I'm here as per the schedule of 5 p.m. as I promised. And this is a live feed in which I'm going to discuss a number of points, none more important than the bank nifty. The banks moved up sharply today, and I'm going to discuss that. Along with that, I'll discuss a lot of discussion is going on Deepak Nitrite's result as well as Avenue Supermarts. So a lot of stocks to be discussed. Even after that, we'll answer all your queries and let's discuss the market as well. Before I do all that, here's a standard disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Hello, Jayesh. So basically, whatever I discuss here is purely my analysis and whatever I think about the market, and you have to take your own decision and understanding what the things are going on. I may be wrong, I may be right in all respect. Thanks a lot for liking my video on the multi-bagger picks that I picked. Some of them large caps in which you can make around 20%, in which there was Asian Paints as well. Uh, so today's session will basically focus on the move that we have had in the market. And I watched the market till around 12:30 p.m. And at that point of time, it didn't look like that the market would cross 9100, 9150. But then when I checked back right at the closing, and the market was at past 9300. So quite a dramatic recovery we have seen. Banking sector really led the way, and some of the mid cap banks also performed really well. So I'm going to discuss about the banks in details, and of course, I'll pick up on a couple of stocks that I'll discuss. So there are two stocks in my radar today, and one of them would be Deepak Nitrite. A lot of request has come in for Deepak Nitrite, and their results are also out with the profit growing nearly 80%. And all Avenue Supermarts, in which they have again performed very well, and the performance have been good, 40% growth in net profit. Yet the stock has been falling. So after making a high of 2550, the stock has gone down sharply from there onwards. So these are some of the things that we will be focusing on. Let's start the session with the market talk, or let's understand how the market is doing and where it is headed at this point of time. I'll also answer your queries, so don't worry, I'll answer your queries also in the second half of this live session. Uh, so about the market, so we started the day around 9,000, 9,100, and after opening high of 9,100 or so, we went all the way to 9,004, and it looked like 9,000 would be broken and we could head towards 8,800, 8,700. Eventually, we made a fast recovery, a giant recovery from those levels of 9,030, 9,040, and ended up on the higher side. So we went past 9,100, 9,200, and eventually above 9,350, led by the banking shares, ICICI Bank, HDFC Bank, and many more. Although other sectors did not participate that much, but Reliance Industries also did exceptionally well. So b- basically, what has happened is there have been there is expiry tomorrow. So the monthly expiry is tomorrow. This is games going on for those monthly expiry. We could see the market down by 200 points tomorrow. You never know. So these are really very volatile times over the next few days for the market, and only the real picture would shape up next week from the first or second of June, when the market opens after the expiry is done, this month is done, and everything else. I still feel that the market is in a severe bear grip, and I still believe that the market is headed much lower from here. And these are opportunities to exit your weak positions, exit the positions in which you have been stuck for months, for years, and you've been making losses. That losses have been cut. This is not a time where you add on to those loss making positions, add on to those stocks which are in the laggard sectors. For instance, in the mid cap banking pack, not IT but banking pack, uh, the the you can say the underperformance is huge. So you need to understand that in that sector, if you are getting a rally to exit, then you need to exit those you can say companies in the mid cap bank. And many people have asked me queries about mid cap banks, and I have said that time and again that some of the major mid cap banks, you have to just exit. Even the large cap ones, except for one or two, you don't need to be in, because the June and September quarters could be very bad. So there is no continuous upside that you can see. The upside that you are able to see in some of the consumer names, in some of the chemical names which have been doing well, you don't see in the banking sector, and they are going to suffer even more. So considering all that, one needs to take the opportunity of this up move in the bank nifty, this up move in the banking sector, to exit positions. uh, Bank nifty at higher levels would be very difficult to, I mean, uh, in that to invest into, because it would find a lot of resistances. So taking all that into consideration, my suggestion is at 9400 nifty, 9500 nifty, you need to exit some of the positions, wait for declines to get into marquee stocks, very good stocks such as, and I've always talked about, such as a Asian Paints, a Pidilite, even an HUL at lower level. Uh, Something like a Whirlpool, a Blue Star, Hitachi in that white goods segment, even a Voltas. These companies over a 3 4 year period, a Bata, InfoEdge, etc., even in the mid and small cap or in that arena, they are going to do pretty well over the next 4 to 6 years. So one has to have a keen eye to look at those companies. There are few financial companies which may do well. There are a few AMC companies that I have talked about time and again, which are at attractive levels and you can buy. But kindly have a good 5 6 year time horizon. Do not have a 1 or 2 year time horizon. This market is not going to give you very good returns apart from some stocks in the next 1 year or so. And so take that into consideration. Telecom is, in my opinion, will continue to do well in the next year and a half. So that is one sector to look at. The other sector that one can look at is chemicals, of course, for the next year and a half, and to an extent, some of the pharmaceutical companies that I have talked about. So apart from that, you have to be very wary, even in pure consumptions, even in these white goods stocks that I have talked about, even in the Britannias of the world. You need to have a good 3 to 5 year time horizon, but the patience will be rewarded big time. That is my understanding once things normalize on the ground, and it will normalize for sure in the next 6 months or so. So that is about the market. Now let's just talk about two stocks that have come out with results and probably have not seen a very good up move post that. So one of the stocks, and this has been a favorite with the retail investors, and I'll tell you why I want to talk about this stock. It's an interesting reason. I'm going to talk about Deepak Nitrite. Now, everyone is talking about Deepak Nitrite. There's no one that I know in the investing circle who doesn't want to talk about Deepak Nitrite. And the reason for that are few. So, number one, the stock has moved from around 150, 180-ish level in the last year or so, all the way to 500 levels. The second reason is it has been a relentless up move, and there's no looking back with the circuits and also consolidation. And so over the last 15 months, 14, 15 months, it has scaled 550, 560 levels. And the third and the biggest reason is that the stock has taken over the imagination of the retail investors. So probably the retail investors have got into Deepak Nitrite at 450, 460 at best, and then at 500, 550, 560, or at highs. And now they are talking about why the stock is not moving even after an 80% surge in profitability. So I can tell you frankly, people who are holding the stock, it doesn't look like that the stock would go up higher, especially after the results, the kind of movement that the stock has seen, because results reactions are, you can say, precursor for the next 3 months movement. That's what I think. And today the market was up 300 odd points. Not only say something like you can say banking, but other sectors also did well. Reliance went up from around 1410, 1409 levels, 1411 levels, all the way to 1460. There have been small cap companies that have done well, which are not in the banking sector. Now, these two companies, and I'll talk about Dmart later on, but something like Deepak Nitrite came out with stupendous results with an 80% profit growth, very good margins, and as far as I can see in their numbers, very good, you can say, sales in different areas, especially in their sanitizer business, and the kind of you can say spurt that they have seen in the sanitizer business, all has been at you can say at the peak level. And this is what is extremely crucial to understand. The peak level, is this the peak for Deepak Nitrite? And probably this is the only reason I can say that the market would seem Deepak Nitrite to be peaking out in terms of numbers, peaking out in terms of profitability. And so the smart players who have got into the stock when it was lying at 150, 170-ish level, or even at 253, even at 300, 324, when the decline came in February, March, people got into it at 320, 330, and large players got into it. Probably they are looking at a trading position in that manner, that now the results might be peaking out. That is one thing. And why I say this here is I don't say it for any consumption stock. And I say it always for a commodity stock peaking out of results or peaking out of numbers. uh, I'm not sure whether this is going to happen. You would maybe you can see the stock at 600 1 week down the line. But what I see from the results, I just say it. And what I realize from the results and the reaction of it is that the smart players understand that the current results could be the best that Deepak Nitrite could give for the next 4 6 8 quarters. And these results will taper out over the next 2 quarters, and the stock may taper out to 400 levels or less than 400 levels over the next 6 8 months, rather than going towards 1000 levels, even though the stock is trading at only 12 13 times earnings. Now, why I say that is because I have seen stocks in the chemical sector peak out when or the charts peak out when their best results come out. And that is the biggest reason I don't like the chemical per se sector. And although I do like Vinity Organics, Galaxy Surfactants in that regard, and even for that matter, Deepak Nitrite, but I don't go ahead and invest. And the reason for that is there is no consistent growth over a 8 10 year period that you can see. And probably people who have emailed me, and you can also email me on deep you can say market analysis or market you can say discussion, and we can have a discussion on other means of media as well. So when I do that with other people, other retail investors, I do not recommend them many chemical stocks, even though they have gone up 8 10 times. And this is the prime reason, because you never know when the market turns a tide on them. And when it turns big time. So if for some reason this is the reason why the selling is taking place and why there was no buying in Deepak Nitrite, then we could be having a situation where the stock could eventually go to 400 380 levels. If that is not the case, then we could see a recovery coming in this week, in the next 2 days. Otherwise, we could see the stock going further down going forward. So that's about Deepak Nitrite. And the chemical sector per se is like this. So buy into a Galaxy Surfactants, Vinity Organics, realizing that they are selling chemical reagents, they are selling chemical products, compositions. They are not selling the products itself. They are not selling a surf excel. They are selling the raw material for surf excel, and that's why they should be considered as contract manufacturing company. They should be considered as raw material providing companies. They should be considered as an ancillary company rather than a product in itself, rather than a brand in themselves. And hence I believe that these stocks could be traded over a longer period of time, say 3 year 4 years, rather than invested into 3 year 4 year time frame. And there is a marked difference between the two. Now the chemical sector has had a you can say a move from 2016 onwards, when, if you remember, in 2015, and we had that sugar rally, we had the chemical rally as well. This chemical rally has continued, but many of the chemical stocks like Kiri Industries, Sudarshan Chemicals have gone by the wayside. uh, and graphite and alag electrode companies and so on and so forth were also named in the same vein. So they are on the wayside as well. Whereas companies which are in the pure consumer domain always comes back into focus. And when you look at their 6 year chart, 5 year chart, they are up manifold over that period of time, no matter which stock in the consumer sector you pick up. So a stock like Tata Consumer, for instance, that has been a laggard since 2014, 13, 14 till 2017, 18. But when the market started to fall big time, the stock went to 200, 230, 220, and then staged a remarkable recovery with the company changing its, you can say, business model, and Tata Global Beverages became Tata Consumer, and the stock doubled in no time, even though the market was falling. So this is the power of having a pure consumption stock. I'm not saying you go ahead and buy Tata Consumer, but I'm just saying that you buy the brand itself rather than buying ancillaries. And I that's why I fear buying into chemicals, only because of this reason. Nothing else. The sector itself is pretty good, but for me it is extremely difficult to diversify or to disseminate between a chemical company which would continue to grow well, like a Pidilite, or a chemical company which could just die down after a few up moves, like a Kiri Industries, and then just be stable because the numbers are not coming in, because their product might be selling big time. At one point of time they peak out on the kind of sale that they are having, and eventually the profitability die down. So this is about the chemical sector altogether. I hope I've made my point clear with respect to the chemical sector. That is not to say that companies like Vinity Organics, Galaxy Surfactants, something like IOL Chemicals, or these Sudarshan Chemicals of the world, or Pidilite and all, they are bad. I'm just saying that I would not invest because it is extremely hard to understand when the stock peak out. And let's see how Deepak Nitrite works out later on, whether I am right or wrong. Only time will tell. So let's see over the next 1 week how Deepak Nitrite pans out. All right, the second stock I want to talk about, and here I can just let you know that you can ask me queries through Super Chat and Super Stickers. And once you ask me queries from there, it will help me grow the channel, and it will help you also eke out answers from me, even when I'm explaining a point about any company or when I'm explaining about the market. Uh, the second stock I want to talk to you about is, of course, Dmart, as I said. So Avenue Supermart came out with stupendous results again. 270 odd crores of net profit growth of 40%, a sales growth of 20 odd percent. Uh, Very good results. The stock is trading at 112, 115 times. Big players are into the stock. There's very low free float, etc. But that is also a detriment for a stock. So if a stock is trading at 115 times earnings, then there is not even a 1% chance of disappointment. That is what needs to be understood. And in that regard, the disappointment came in with respect to margins, with respect to operating margins, with respect to the net profit margins. The company was around 4% on net profit margins, whereas they had consistently done around 6 to 8% earlier. So the disappointment came in there. there, although the profit continue to grow. So what markets are understanding that eventually if the margins continue to shrink, then the profitability would not remain the same. And that's why the selling, because if the selling had not come in, the stock was trading at 130, 135 times, which is exorbitantly expensive. Even at 112, 115 times currently, the stock is expensive. And I have a target of 1800 on the stock. I have a target of the stock trading at something like 80 times, at best, something of that sort. uh, 80, 85 times, or at best 90 times earnings, current earnings, 80 times forward earnings, and that's just about it. uh, I do not see the stock moving higher. I see the stock going towards closer to 1800 going forward, although the company is good. But I'll not venture into it and buying into it unless the stock really falls 20, 30% from here. So I won't go ahead and buy at 1800. I'm just saying that a higher fair value of Avenue Supermart should be around 1800. If the margins are not there, eventually the profitability would go down. I have bought the stock at 600 odd rupees on day one of listing, when the stock fell a little bit after listing and all, listing at 650. Made money, exited the stock a year ago, and would look to buy only on major declines, only when suppose it falls to 1600, 1500 levels, because I believe in margin of safety. I believe in some kind of semblance of respectability with respect to valuations, in order to get into a company, rather than in order to get into a business, rather than buying high and then repenting it, or really worrying about it, that okay, whether the numbers would be good or bad. Don't you people worry when you buy something like a Avenue Supermart, that okay, results are coming, so when is the result? So if the results are there, so whether the results will be good or not, then what will happen after the results? So even with very good results, such companies with very high valuations go down, and this is what has happened with Dmart. I will not be surprised that if the market reverses to 8700, 8800, Dmart could this time around go to 1800 levels. So that is about Dmart, and so I've just explained about two of the companies, that is Dmart and Deepak Nitrite, and also talked about the markets. Now I'm ready to take up your queries, and I want to again request you that you can ask me questions through super chat and super stickers as well. And kindly subscribe to my channel. It would help me grow the channel big time. It will help me put in more, you can say, products on the channel, because once I'll have 30,000 subscribers, I'll be able to put on more products for all you people. uh, you will also agree that the channel currently has a pretty low subscriber base, and it needs to grow further. So kindly share, like, and subscribe. I seldom say about this, but I'm saying this at the moment because I see that many people do look at the videos but do not subscribe. So it's uh, it's my request to kindly subscribe to my channel. All right, so let's take up some of your queries that are coming up currently. Uh, okay, so Santosh has asked that whether he can buy Kilpest at the moment or not. I believe that Kilpest around 140, 150 ish is nice, but again, take your own call and have a good stop loss into it, since it's a micro cap. And yes, I have a target of 250 by year end, at least on the stock, at least 250 post this result, whenever the result come out. And there are many positives for the company. So yes, you can buy, but with a strict stop loss in place. Ipca Labs can be bought at 15, 20% down from here. Do not buy at the moment. There have been many news that is going on. So Ipca Labs can be bought 10, 15% down from these levels. I would avoid Delta Corp, but there are people I know of who are very positive on Delta Corp. In my opinion, the business will take at least 2 to 3 years to really come back to its level because of all this lockdown, etc. So avoid Delta Corp. In my opinion, I'll avoid Delta Corp. Thanks a lot, Sai, for your super chat contribution. Bear Crop Sciences, Bharat Rasayan for long term. Uh, Bear Crop, very good company. The stock has run up over the last few days because of we have had the locust attack, and so there have been chances that there'll be more use of fertilizers, etc. Bharat Rasayan, again, a very good company with very good margins and profitability. Both are good for long term, but buy only on major declines. Whenever the market there is absolute pandemonium in the market, go ahead and buy these two companies and just stay put for a long period of time. Nestle India can be bought around 15,500 to 16,000 levels. So that's what I think. The stock has run up a little bit. Uh, Wait for declines again in those companies. Whenever the decline come in, don't look at the prices. If such marquee stocks are down 2-3% in a day, right? Like after the result, the stock was down. That was the day to buy into Nestle. And so these are the companies are bought when they are consolidating, or when they are about to, you can say, they are not doing anything. Either they'll consolidate or go down big time. These are the times to just buy into it. You cannot just find levels. Same goes with Reliance. It is consolidating at the moment, and I'm invested into it, so take that with a pinch of salt. But I see the stock go to 1800, 2000 in a year's time. Tata Motors, complete avoid. If you have bought into it, any rise, any move upwards, just exit the stock. They don't know what their business is. That's what I understand, the way they talk about the business. So how will I know about the business as a whole? Avoid it. Buy into simpler auto stocks if you want to be in autos. Sun Pharma is good at these levels. I think in a year's time it can touch 580, 600 levels. If you have bought it at higher levels, Jesh, then just hold on and exit when the price comes in of 580, 600. Going above 600 is difficult on Sun Pharma. The future group stocks. So I'm going to make a video on the future group stock in weeks to come. I'm working on that, and avoid future consumer. Don't look at it. Don't look at the fact that they are selling and there's big bazaar and they are selling many products, many food products, etc., etc. There's a lot of pledging in the company. There is a lot of debt, a lot of problems in the company with respect to all that. So kindly avoid. I saw Cupid today, and there have been some, you can say, request on Cupid. I'll make a video later on. It is down big time. Avoid it for the time being, the way it has fallen. A Gillette is a very good stock. Keep on buying every month, every 15 days. Do an SIP in Gillette. It will give you good rewards. It is at a very attractive level. Normally, Gillette trades at 80, 90 times earnings. Avoid all banks, whether it's South Indian Bank, any mid or small cap bank. This is the rally to avoid the banking sector. As I said, this is the rally to sell into your bad banks that you're having, and you're having trouble holding those. So this is the rally to exit those. All right. Delta Corp has fallen big time, so there had to be one, and we are hearing news that many of the cities in different states are opening up. So it is not that they are not, and although the pandemic is spreading, that there could be a chance that they would get license to open up as well in a few weeks time, in a couple of weeks time or so. Also, there is a buzz that the hotel industry might open up in the next 1 week to 10 days, because they are also saying that they are having a lot of trouble continuing with the business concern. And so if the hotel industry, the hotel business starts, then maybe Delta Corp's business may also begin. Okay, Subex is very good stock. Again, it is in auto ancillary space. Although I like only Motherson Sumi, Aisha Motors, Maruti in that sector, but Subex is a good stock. But when will it move? I don't know. You can accumulate if you have it. Just hold on, but have a good 5-6 year time frame. It would help you strong. I don't know tomorrow's Nifty level. And I don't do intraday or very short term understanding of the Nifty, but I think today's move is a misnomer, and we could go back to 9200, 9150 tomorrow. I don't know, but we it seems like that this is a trap, and we could see Nifty back to 9200, 9150. Nice talk, Emlyn Fine Sciences, but I will avoid because mid cap pharma might not do that well as large caps, some of the large caps would. And there are, you can say, discounts available for many consumption companies. Alchem is good, Alchem is good. Short term escorts could be bought because of the monsoon coming up and so on and so forth. So short term for me is 3 to 6 months, but again, keep a strict stop loss. Century ply is an avoid. Kajaria, you can do it for the long term, but why do you want to get into a sector which is going to struggle? Take the tiles and all those sectors as some as a sector which would come under infrastructure, and infrastructure and real estate might not do well. Questcorp is good. You can get into Questcorp. Bodal chemicals, in my opinion, avoid. Heidelberg entry level would be any 8 to 10% down, but I would suggest that you buy into marquee cement names even if you want to. Although I'm not very gung ho about cements, but if you really want to, then get into large or larger mid cap cement names. All right. Astral Poly is interesting. So the results have not been that bad, although it has been average. If you have a good 4 5 year time frame, yes, 796 is fine. So you can hold on to the stock. Bharti Airtel, any level closer to 500 would be good entry point. I think because of the promoter selling, this has happened. But buy it at discount only. Don't buy at high levels. You might be caught. So 500, 480 would be good levels. If you're holding Kilpest, kindly hold on till August. Let the two results come out till August, September, and then things will be more clearer. I think stock would be much more on the upside by then. Questcorp is a hold. Aries Agro is a sell. Torrent Pharma is good. So the company has come out with decent results. Expectation was even better for the results to be, and that's why some a little bit of fall. Probably another 4 5% down from here could be bought into. IOL Chemicals is a good company, so declines should be bought into, but again for long term. Avoid Aries Agro, in my opinion. All right. Navin Fluorine is good. Navin Fluorine is also a very good chemical company. So just add that to that list of Vinity and others that I talk about. Navin SRF and so Navin Fluorine is also up there. A Siemens, why would you like to enter? If I were you, I would not enter any capital goods company at the moment, even if I have a good 7 8 year time frame. Because these companies might not be able to get the orders finished, and then all this mumbo jumbo of the numbers and eventually cash come in. So I would avoid entry level, in my opinion. Any 8 10% downside from current levels could be a buying opportunity in Siemens, but I don't think it will give you a very good reward. Ipca Labs is good. Declines should be bought in. Avoid HSIL. Both Tata Motors and Ashok Leyland is an avoid, whether it's TVR or anything. Thanks a lot, Pawan, for your contribution. Your view on Kaplan Point Lab. Can I hold for 5 years? If you are in profit, exit Kaplan Point and get into for a 5 6 year time frame, get into an HUL or an Asian Paints, might give you better returns. I think the rally in the pharmaceutical sector would be probably 2 years, 1.5 years, and in that also there are select pharmaceutical companies that would do well. I don't see Kaplan Point doing that well. In fact, Aurobindo is even a better option than Kaplan Point at this point of time. I explained about Deepak Nitrite throughout this video, so kindly go and watch it. Would be better. Camlin Fine is also an avoid. TCS is interesting. So TCS can be bought if you have a very long-term view and you want some, you can say safe returns. Yes, TCS these levels is a buying opportunity, but the returns would be between 14-15% or so. All right. Avoid Camlin Fine Sciences. Kilpes can be bought on declines, but do your own research onto it. Tata Elxsi is a good company. Tata Elxsi is something one can buy into and hold for 3 to 4 years. Thanks a lot, Deepak, for your contribution. Your view on Reflex Industries video on the same, please. I'll definitely make a video on Reflex Industry. I'll make a note of it that I have to make a video on it. I need to get into the stock and only then I'll explain to you. But I'll definitely make a video on it. Aarti Industries is good. I've talked about it. Himadri Chemicals is an avoid. Yes. Dabur is, I think it has come out with numbers or something, but the stock was down. I have not liked Dabur at all over the years. Although if you take a 20-year time frame, Dabur has done well. I would avoid Dabur and get into something like an Asian Paints or an HUL for that matter. I consider Asian Paints as an FMCG company as well. That is why I'm saying at around 1900, 1950, HUL looks good, and I see in 18 months scaling new highs. The company is scaling new highs. I think this is just a 1 or 2 quarter phenomena, and these are very good levels to buy into something like an HUL. Okay. Any stock for short term? I think short term in my case is 6 to 8 months, and in 6 8 months time, I think Reliance looks good. I'm invested into it. I think it looks good to scale new highs once the AGM comes in, and especially after 2nd of June, I think I see a big move in Reliance. Avoid L&T Finance. Avoid any NBFCs, mid or small cap NBFCs. Tanla looks good. In fact, on the short term chart, Tanla looks good at 65, 66, holding on to above 66 levels, above, sorry, 60 levels. And I think I see a move above new highs again in the next 2 to 3 months. Let's see how the results would be. Sanofi is a good company. So any declines towards 3500, 3500, I say, any decline of 3000 points, any decline of 2000 points on Sanofi, any major decline of 5-7% on Sanofi India is a good opportunity to get into it. All right. So thanks a lot for being in this live chat, and I hope I've answered many of the queries. Kindly put in your questions. I'll definitely come up with another Q&A session in a couple of days' time. And thank you. Please like and subscribe my channel, and subscribe to my channel for sure if you're watching it. Thank you.